Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, March the 31st. The year's 2021. Let's talk trading. Winning versus making money, part 3 with Walmal. And just like parts 1 and 2, this video is for educational purposes only, and your results may differ from mine and from Walmal's. So Walmal, that fastest 15-minute of trading keeps running out on us. So, um, you know, when we were trading earlier today, I was kind of teasing you about, you were doing something that, and you always do it that way. Yet you were saying, well, if I would have done it the other way, I would have made more money. And then I suggested that, you go ahead and try it the other way, and then get back and compare things. So what's your take on that?
Well, you're right. It's the type of thing where I was watching. Well, actually not watching, but I was reading an article from some old-time trader and how he likes to go and add on to his trades. And he's got a methodology that he put forth number of years ago. And I look at it, and it looks sound to me, but I don't trade that way, and so it's hard to go and do it and break a habit, And we've talked about habits on videos many times, but it's so hard for me to go and do it. So I started implementing some of it, and I've implemented some of it, and it's been very, very successful for me. But I just can't go and jump to the next step and just get the next part of it, do the next part of what he's suggesting. And you asked me, you flat out, why don't you do it? And so. It's habit. I don't like it. I mean, and that's just the reality. I don't like it, and so I got to go and try. And I think your suggestion of how about just go and just try it. And the thing is, the way I trade. I trade the beginning part of the day where I go and make my money for the day, and then I go into the latter part of the day. I either trade with a much smaller lot size, or I may even trade on a demo account when I'm going to try to go and learn some new things. And so I use the second half of my trading day just for learning, and education. And you always go and tease me and say, well, it's only fake money when you're doing that. Who cares? It's just fake money when you're doing that. But what's my response back to you all the time? It's the same thing. I don't want to trade any way differently when I do fake money as opposed to when I'm using real money, because I don't want to go and have a fake money habit go and wind up creeping into my real money. And so that's why I don't like doing that. But I think you're right this time. I think this type of thing where, hey, what I need to do is just go and say, maybe take a week, and just say, you know what, I've made enough for the month. I'm just going to take a week, and what I'm going to do is I'm going to trade this new method of doing it and see if it actually does work the way this guy claims. Now, on paper it works, but that thing, it's just that, it's like a little, sort of like you get a scab, and what do you want to do when you see a scab? Everyone wants to pick that scab off, and that's it, and it's just so hard for me to just let it go and just do it the way you're supposed to, and I guess I got to go and do that, and because here's the reality, I'm winning, so, and I remember you telling me, and I've seen you say this to other traders, and I've seen you say it on videos before, if you're making money, don't do anything different. And I guess that keeps on popping in my head. Why would I want to go and change something if it's making money? Well, here's the one and only reason why you may want to do it. And that is that there's a possibility where I can go and make more money, or I get to make my money a little bit quicker, and I don't have to be exposed to the market as much.
Yeah, because in fact, you read my mind, because I was going to put that question to you, because people put it to me, go, well, if the buy zone made money, why did you do the rat zone? If the rat zone made money, why did you then do the wick zone, and on and on? But it's just that, depending on the time of day, depending on price position, you might employ one method versus another method. And that's part of it.
That's exactly right. In fact, with this new way that I've been messing around with and trading with and whatever, as you know, I don't, I only use it at certain times, and I don't do it all the time. It's sort of like the Walmal trade. With that particular method, if I'm not in a Walmart trade by like 30 minutes into the hour, I just go and say, yeah, there may be a Walmart trade that comes up in the last half of the hour. I'm just not going to take it. I'll just wait till the next hour. It's just that I've learned over time, more times than not, if I get into a Walmart trade towards the end of the hour, it just seems to go against me more times than not. And so for that reason, I just don't do it. I just made it part of my trading plan. I just don't go and do it. I'll just wait for the next hour. It's not the end of the world. I'll just go and wait. Whereas with this method, it seems to be suited better for trading at a different time of the day. So, for instance, what I have noticed with this method of trading is Walmal, I like to go and last trade somewhere around 11 o'clock Eastern time, and this type of trade seems to work better past 11 o'clock. It doesn't work earlier than that. Yeah, it absolutely does, but it just seems to work better after that. And I know, TRO, I'm going to put you on the spot. We had talked about a couple times going and talking to folks about that. Sometimes for some type of future video, and maybe we're getting close to that point. So just put you on the spot there for a second.
Oh, that's okay. Well, yeah, it's just like I woke up and I had an idea. Actually, I've been thinking about it not trading against the H4 candle color and trying to take get the big part, the lion's share of that range. And so there were some trades like earlier today when price was, I'm pointing on the chart here, price kept going across the 5 and I didn't take it. And I'm like kicking myself. And you said, well, you said you weren't going to trade against the H4. I go, yeah, I know. But it's just one of those things, though. It's like in the moment, could I have done it? Yeah. And if it went for me, I'd be happy. If it went against me, I'd be kicking myself. But, that's the nature of trading, because you can put on one trade, it could be a winner. You could put on another trade, the same place, it could turn to a loser. You can't control that outcome.
That's exactly right. And that's just part of trading, Yeah, every time you go and place a trade, you're taking on risk. And hopefully you're smart enough to go and set your risk up in such a way and say, you know what, let's say I'm willing to go and lose, $100 on a trade. I set my risk up so that I can't lose more than $100 on this trade. So I know at the end of the trade, that's where I'm at. And that's part of, making money, and you can take a loss on a trade of $100. In fact, you saw me earlier where I went and took a loss and on a particular trade. And I took a loss, and I said, you know what? I think I was only down like a pip and a half, and I just went and exited the trade. And I think it surprised you a little bit. I don't think you said anything, but I think it surprised you a little bit because I got out so early. And the reason why I got out is I just didn't like what I was seeing on the charts.
Yeah, well, yeah. There's a few traders out there that they say, their stop loss is basically if it moves against them 1 pip, after spread. So, like right now, the price is at 5.7. So if it dropped down to 4.7, they'd be out. Why?
Yeah.
Because price isn't doing what they expected or want price to do. It's, that's simple.
Yeah, it's that type of thing with you have a particular method. Let's say using a Walmal line, and let's say you took the break of the 80 this hour, and let's say it went up and it broke the 80 and it went up by 2 pips, and then it ran all the way against you 5 pips. It's the type of thing where you say, yeah, it could come back again, and the rules say you can let it go as far as 7 pips. That doesn't mean you need to wait for it to go 7 pips against you, And even if you would have done that, let's say you said, you know what, it ran against me those 5 pips, and I got out with -5, and then I took the next break, and that one ran up, and I could have gotten on that trade. I could have picked up 10 pips on it, And so I netted 5 pips. If I would have stayed in the trade, I would have netted 10 pips, but at the same time, you're also taking on the risk that you could have also lost 10 pips. So I'd rather just go and take a small loss, wait on for the next setup, and here's the thing. I said this in yesterday's video. This is not a get-rich, scheme. The whole idea is here not to go out there and I'm going to go and slam me 100 pips today, and I'm going to go and put 20, 30 lots on that, and I'm just going to walk away with $5 grand. I'm going to walk away with 10 grand on this one trade. That's not what I'm trying to do. What I'm trying to do is be smart. And in any business proposition, you go and take on jobs or trades in our situation, and on some of those jobs you're going to make money, and some of those jobs you're going to break even or maybe even lose some money. But you do that because you know that's just how you have to go and survive in business. You even look at the biggest corporations. You look at something like Amazon. Amazon struggled for many years before it became the multi-billion-dollar corporation it is today. They almost went bankrupt twice. And taking on risk minimizing the amount of risk so that they didn't go bankrupt. Well, that's the same thing with trading. We take on risk, we minimize so we don't go bankrupt, and that way we can just come back every day and fight and make a little bit more money, a little bit more money, and then by making a little bit more money each time, that means we just have that ability each day to go and maybe take on a little bit more risk. And by taking on a little bit more risk, we can make a little bit more money, and that's just how you build business. That's just that's just common sense on how a business is grown. Trading is a business, and we have to go remember trading is a business, and the whole purpose of this business is not to win trades. The whole purpose of this business is to make money.
Exactly, and it's not to use the latest and greatest indicators either.
Yeah. I mean, and that's so true. I mean, I'll admit that I'm an indicator junkie, just like probably most of the people listening in on this. But the reality is, it doesn't go into my trading plan just because I got the latest and greatest. You gave me a new indicator today to go and test out, and I've got that on my chart. I'm not trading off of that. It hasn't proven itself to me today.
Oh, well, actually, it's not even an indicator to trade. It's telling you when don't trade if price is in here.
Exactly right. And so you saw me go in a couple times today where I took a trade when it was there, and you went and said to me, "You shouldn't trade there. There's no trade indicator says not to trade there." And I said, "Well, that's nice." I got to say, in fact, I think I even said to you, said to me, "Why did you take that?" And I said, because I got a signal.
Yeah, but then I also said you were manufacturing trades too.
The next trade after that, I did manufacture one. I will admit that. I did manufacture
and
one.
so traders, you have to understand what I mean by manufacture trades. In other words, like the Walmal, that's a method. So when price hits the line, that's a trade. Manufacturing trades is when you just have a seat of the pants, gut instinct, what we call airball trades. You've manufactured a bunch of reasons to enter the trade that have nothing at all to do with your trading plan.
Exactly. And luckily I got lucky on that, and I picked up like 3 or 4 pips on that trade. But it could have just as easily gone against me. But bringing it full circle back to making money versus winning trades, I also had a plan on that, and that was that as long as it didn't go more than 2 pips against me, I was fine with that. So just to caveat what I had done, even though it was an airball trade, no doubt about it. But what I did was I said, okay, I'm putting a really tight stop on this. I have a gut feel this is what it's going to do. But if it doesn't prove itself like real quick, I'm out real quick. I'm just not going to go and take on additional risk because, I didn't get a signal. I was looking at price movement and price action, and to me, it just made sense that it was, I believe it was a long. It just made sense to me that it was going to continue up for, about 5 or 6 pips, and then it was going to turn around and come back down again. And it actually did do that. But you're absolutely right. That was 100%, manufactured trade. But to go and protect myself, to go and make sure that I'm still winning money, I made sure that if I did take a loss there, it was going to be a tiny itty-bitty loss. I wasn't going to be taking any big loss. I wasn't even going to go and take my -3. I was looking to get a 1 pip or 2 pip loss, and that was it.
Yeah. That's
including spread and commission.
Yeah, because like right now on the screen, I've got my crosshairs. It's set at the top of the high of the candle, 2 H1 candles that go at 3808, and I had pointed that out earlier while you were talking, and as you can see, price is now dropped off that level. That was a trade I saw. It was coming back into that wick zone. It failed to make and hold that high, and I look left, and it's just like, what's happened when price gets to that point? It's dropped off that point a couple of times. So it'd be real easy to put a stop loss at 38.11, your entry's at 38.08, and right now the price is at 38.01. But that, would have been, just trading price action as I see it at the time. And once again, fellow traders, the fastest 15 minutes in trading is up. So I hope you're making money. Let me know if you're making money, if any of our conversations are helping. And when you sit down at your trading platform, remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.